Hello, and welcome to the GTR 2021 US conference. My name is Gabby Sulbran, and I'm delighted to be here joined today by this fantastic group of leaders in the digital trade space. Joining us today, we have Andrew Holm from Demica, Nick Pachnev from Global Trade Corporation, Jessica Sita from Baker Hughes, Inwa Ha from IBM Global Business Services, and Omer Hiraim from LiquidX. In this session, we're going to explore the role of fintech and digitization platforms in global trade, as well as opportunities for collaboration between fintechs, corporates, and banks. So to start, first, I want to remind our audience that we're going to leave a few minutes at the end of the session to answer some of your questions. You can start submitting them through our Zoom channel, and you can vote on the polls that we'll have throughout the session using the polling tab next to your screen. Let's kick it off by analyzing a little bit the weaknesses of international supply chains. Some of the inefficiencies today have been highlighted by the pandemic, like manual processes or paper-based processes. Ecosystem actors like banks and corporates have started to leverage the strengths of digitization platforms to actually overcome some of these challenges, automate some processes, and make it more efficient to go over these manual and paper-based processes. So around those challenges that have been started to be addressed by some of the fintechs, we first wanted to start by asking our audience one question through a brief poll, which is, what are the main corporate challenges that fintechs can address today? If the answers that we have for you to choose one from are access to new funding alternatives, multi-bank connectivity and data aggregation, process optimization or automation, end-to-end process visibility, and reduction of audit and compliance costs. So if our audience could be so kind and take a few seconds to let us know what's your view on what are the main corporate challenges that fintechs can address. We will then collect your opinions and we'll discuss them over with our panelists today. Some of the challenges here, I think the trend it's concentrating a bit around access to funding, which is a common aspect that we will touch upon in our session today. Process optimization, powered by underlying technologies of the fintechs as well. Multi-bank connectivity, something that is very common for us to deal with at Swift. End-to-end process visibility, and no options or no touching base around reduction of audit and compliance costs. Everything seems to be more around process optimization and automation so far. Let's give it a few more seconds to see the final trends, and we will collect the results. Again, seems to be very highly concentrated around process optimization. Very good. So I think we collected the information by now. Thank you so much to our audience for participating. So trends seems to be that process optimization and automation is one of the main challenges where corporates see that fintechs can help, and followed by access to new funding alternatives and end-to-end process visibility. Finally, multi-bank connectivity and a little bit of reduction of audit and compliance costs. So with these results, I would like to go back to our panelists and ask the team the same question. What is the main corporate challenges that fintechs can address, in your opinion? And if you can, also let us know if you are actually seeing collaboration between corporates and fintechs around these challenges here. So I want each of your views on this. Let's start with Jessica first.
Okay, thanks, Gabi, and welcome to everybody. So to answer to your question, I think that the pandemic in reality has just accelerated some changes that would happen anyway. And mainly I'm referring to the big reorganization ongoing across all the different, let's say, company. And let's say where you can understand the main goal is really to create a more effective business model. So working in this environment basically creates the needs from the corporate to become really flexible, fast, to understand in each point in time the risk profile behind your trade finance portfolio and have the capability to analyze this portfolio under different angles. So you would like to have to look by region, by customer, by segment, whatever. So I think the challenge from the corporate side was really to understand these needs and make, let's say, in a way that was simple from fintech to create a solution to address these goals. And to be honest, I think in the last years, I saw good, let's say, example of collaboration, not just between corporate banks, but also involving corporate self with fintech. And for example, one thing that I can think the last one was, for example, the new bidding tools that has been implemented for bank guarantee, where in reality our goal was not just really to reduce costs, but mainly to create a faster way to identify a best banking partner. So we come up with a group, was really a working group, and with the help of fintech, we really implemented a new solution that is now available. So for sure the trend is there. I see that is becoming, and for sure there are a lot of opportunities that will come.
Thank you, Jessica. Omar?
Yeah, so thank you. So, I think the actual responses are actually quite interesting. I was expecting the process optimization and automation and the end-to-end visibility. The access to new funding options, though, it's something that LiquidX has very much been focused on for many years, and we are continuing to evolve as a company as well. And what we've seen is really the access to new funding options is very much connected to the process optimization, end-to-end process visibility as well. Right. So as what we've been actually tackling is diving into the source of the data, right, and actually capturing contracts and the master services agreements and digitizing the underlying terms of those agreements, right, to provide also more transparency to corporates throughout the life of their supply chain, but also be able to transfer that information into the relevant participants in that supply chain, right? So at every point that somebody is connected to it, all the way down to the financing angle, getting that transparency naturally opens up a little bit more trust in that supply chain and opens up more funding options as well. So, I mean, that's been definitely an interesting evolution at LiquidX that we've seen. And it's great to see that the audience is kind of seeing a similar kind of trend or needing that.
Exactly. Creating basis for trust. Interesting point. Andrew?
Yeah, I would echo those comments. I think Jessica's point is interesting. I think with large corporates in particular, the cutting out of the cost can be very important. You see, for example, a large corporate that runs a securitization, they'll have a small team of people processing those reports if they're doing it manually. So then by accessing a fintech platform, they're able to kind of essentially free up that resource to go do something else. So I think on the large corporates are thinking about that. To Omer's point, I think when you get down into that mid-market, just getting access to the funds in a space that the banks aren't always serving, I think that's where the fintechs had more money on when you get towards smaller companies in terms of accessing the funds. So I think it depends on the segmentation. And one thing that we're seeing at Demica, we're seeing actually companies come to us to look across multiple products. And that's something that's very interesting, that you'll see that they're looking to come to a fintech to say, okay, help me on the payable side, but also I have some receivables that I'd like to monetize. And I think that's, then they have, many of these companies are multi-banked, but they look to one solution to help them in a number of different places where they may have different banks that they want to plug into a platform to accomplish these different goals.
Absolutely. Availability of multiple solutions from single platforms, right? Convenience for the corporate. Inwa, can we get your views on this as well?
Sure, thanks, Gabby. Hi, everyone. We are actually seeing the same as the audience poll. The number one thing out of the pandemic is the process optimization, hyper automation, I'll call it. that's mad rush to automate every process that you can get budgets around. So especially out of the pandemic, it's really around the ways of working and remote working, where I think everybody woke up to the fact, everyone's been talking about it, but you realize that you actually can work remotely if there's a digitized process. And that process needs to be reimagined, re-engineered, redesigned, and then automated. So massive, massive, both at the corporate level and the bank level, which then at the end of the day reduces cost as well as increases ROE, as well as creates efficiencies, as well as lowers risk at the end of the day. So I think the short-term as well as the long-term benefits is right there. So I think we're seeing that same trend absolutely during the pandemic, as well as, it continues to be the #1 case. I think the end-to-end process visibility, that's a very interesting one, obviously, as you think about both the corporates and the banks in terms of the end-to-end physical supply chain into the financial supply chain. That visibility was really poor, as we all know. And I think, again, given the disruptions during the pandemic in India and in many countries on the supply chain and the sourcing side, that's woken up everyone to the fact of spending on the technologies that enables that end-to-end visibility. And then for banks, right, long way to go, but as you automate the processes, the visibility will come, the transparency will come, regulators will be happier. So I think both from a corporate and bank perspective, we're absolutely seeing that. We're very deep in creating those solutions at IBM as well. And I will address the interoperability and collaboration question that you threw out, Gabby. What we're seeing working both with corporate and banks is that connectivity is more corporate-led, I would say. Yes, some banks who are at the forefront, absolutely want to connect the two, and connecting the two is really connecting the physical and financial supply chain, but we see it more corporate-led, where corporates are pushing their banks to create that connectivity, whether it's in the core trade space, whether it's in the supply chain finance space, but very much corporate-led. So that's what we're seeing.
Exactly. Corporates are driving the increase of collaboration and banks' openness to work with fintechs as well. Absolutely. Nick, can we get your views on this as well?
I would tend to agree. We have seen exactly the same trends in our line of business, which is a traditional trade finance. So dealing with letters of credit, bank guarantees, sureties. It's kind of extending the end-to-end visibility and digitization as a kind of foundation for process automation. Really, you have to start first by connecting the discrete processes together, increasingly focusing on connecting corporates on the both sides of the transaction. Fintechs are getting pretty good at this compared to banks who might have a limitation connecting to non-clients, extending connections beyond the banks to insurance companies, to insurance brokers, to various logistics providers and certification providers. Also leveraging those platforms that have been developed with the larger corporates to digitize lower value and smaller transactions for occasional users. So the tech starts to trickle down to the smaller companies who might not have the capabilities of the large corporates. Corporates definitely pushing fintechs to extend the process, so expand the boundaries, as Jessica mentioned, starting with price discovery, getting the quotes for individual transactions to the banks, all the way down to automatic settlement of the fees at the end of the process. I was a bit surprised that the audit and compliance didn't register on the poll. We've seen quite a few corporates, especially the large ones, using technology to address those issues. Audit becoming a costly exercise for a lot of corporates, especially global corporates that need to pull that information from various sources. And we see that kind of digitizing the workflows helps them to address that concern. Automation is definitely is a very big and very hot feature looked by the corporate. So once you have the process digitized, you can start looking at the repetitive, low risk transactions and try to move it to the next step of the process without the human intervention. So that's gaining the traction. So all along, I think the collaboration initiatives are also starting to develop. We at GTC were part of an initiative out of Europe called Digital Vault Services, where there was a really collaborative effort of corporates, banks, insurance companies all together trying to develop a new way of digitizing bank guarantees and sureties for domestic markets. And the initiative is picking up right now. But it was interesting how you can look at different perspectives from both from the corporates and insurance and the bank side, which traditionally was not present in the past.
Absolutely. Thank you, Nick. Now, you all touch upon very interesting points on things that typically or in the past have fallen under the realm of the traditional incumbents. You talked about insurance and relationship with insurance companies and the trust, for instance. Those are things that typically financial institutions have addressed before. But the rest, it's something that fintechs are doing better. Why? Why do you think fintechs are best positioned to address some of these needs and fill in those gaps and not traditional incumbents? And I would like to ask each of you as well briefly on why do you think this, starting with Jessica again.
Okay. So again, thinking to the corporate needs, I think if we can realize that in a lot of cases, there is a requirements to move from paper or mail or even file-based process to more a wing-to-wing virtual process in which we need to have the capability to involve different stakeholders across the world using the same set of data, speaking the common language. And so you need to have, let's say, someone that is already able to work through the virtual things, no? Because it's something that you can learn in one day. So I think that fintech have the knowledge and the expertise and sometimes the experience, because if they were already on the market, to know all the different aspects, and for sure have the capability to translate the corporate bank needs in a solution. So just because they have the technical capability to do that, combined with the knowledge coming from corporate and banks.
Makes sense, absolutely, and the agility. Omar, can we get your view on this as well?
Yeah, I mean, a very similar response, actually. You know, we've, you know, I think the biggest thing is nimbleness and the agileness that fintechs can have. You know, when you look at banks and traditional incumbents, you know, they do certain things great, but technology requires constant evolution and development. And, you know, when you go with or a bank-specific solution that is maybe developed in-house, you know, 5-10 years from now, you know, that technology can quickly become outdated. Partnering with a fintech company allows that constant evolution to take place. So you don't necessarily have to worry about ever kind of falling behind what's happening in that industry, right? So I think that's a core aspect. And another thing is really going on what Jessica said here is, you know, building connectivity on that wing-to-wing basis, right? I think the fintechs are evolving significantly to not necessarily have just purely vertical expertise, but also covering aspects that, you know, go from the beginning to the end of the life cycle of a transaction, right? And ingesting that information, becoming a single hub for corporates to participate in and allow them to kind of strengthen that flow of information with their relationship banks.
Absolutely. Single hub, going back to the getting access to multiple solutions from one single point. Very interesting. Andrew, can we get your views on it?
Yeah, and I think if you were to ask the big banks and small as well what they think about this question, I think you'll see that the debate about build versus buy has largely been settled. I think a few years ago, when we at Demica, the vast majority of our income and our assets come from banks. We work very closely with our banking partners. A few years ago, we were always trying to convince people that, okay, this is why you should work with a fintech to build the platform as opposed to doing it yourself. That's really not the question now. Now everyone's moved on to the question of how do we work with the fintech? How do we engage? Of course, it's a very long process with these large institutions, but there's a recognition that to Omar's point, they don't have the ability to evolve at that speed, and so they can outsource that to a fintech. The banks can still own the relationship, they can own the capital, and they're still central to this industry. But by outsourcing that technology to a fintech, we can move faster, and they can leverage the benefits. They're essentially renting the service, and all of the banks are paying for it. So it becomes much cheaper for them. And when you talk to the product teams that maybe in the past had managed the platforms, and you tell them that at Demica we have 150 people working on the technology at any given time, there's no way a bank is set up to replicate that. So I think that's why the banks are moving to work with the fintechs, and then the corporates as well. They see the capability, and they see that they can work with the fintechs and keep their relationship banks fed, so they can kind of have it both ways.
Exactly, best of both worlds, still keeping the relationship while outsourcing all the heavy lifting. Absolutely. Inwa, can we get your views on it as well?
Sure. So I'll take a slightly different view, not to be a contrarian to this team here. So I think that's a great question, but it's also debatable as well. I would not say the fintechs are always best positioned. I think it really depends on what you're looking at. So, and my view there is coming from IBM is obviously both a corporate, and we're a client of other fintechs and banks, as well as we also act as a fintech as well. And so we're kind of seeing both sides of the coin, if you will. And obviously, if you're talking about some banks, they absolutely will be slower than the smaller fintechs, et cetera. I agree with all the comments said. But at the end of the day, not all the fintechs really know the business side of the bank or of the corporate either. And a lot of corporates are investing heavily in data scientists, as are some banks, and they've got massive firepower now, than ever before, right, in the last several years. So I think it really depends what you're trying to solve for and what kind of technologies the fintechs can offer as well as understanding the business. So I'm kind of in the middle, as you can tell, right? Being a fintech, of course, we think we're better than some of our clients, and that's why we're working with them. We've got exponential technologies to offer at speed, at agility, using garage methodology, et cetera. But at the same time, I know far too many clients who are very well vested internally, probably better invested than most fintechs in the market as well. So I think there's both. And I think it's all about how do you collaborate and partner up in certain domains that makes sense, and it becomes a true partnership, right? And that has to work. But I'm not sure if all fintechs are better positioned than corporates or banks.
Very interesting view, Inwa. Thank you for that. And from Swift perspective, we can share a little bit of that view as well. And you're right, it's about the true partnership that you can get and the best opportunity in which the fintechs can add more value and where traditional incumbents can. So it's a good, interesting point to add up to the discussion. And last but not least, we want to hear Nick's opinion about it as well.
I share a view that the fintechs might be conceptually better positioned to be in that role of that's sort of like a neutral party that can develop the standards and interfaces, right? Interfaces and standards developed by a single bank would tend to be looked as a proprietary offering, where the fintechs can become that neutral party. And fintech doesn't necessarily has to be an independent company, right? It can be an industry sponsored initiative. I probably will go as far as to say that Swift is probably one of the first, if not the first, fintech in the industry. I mean, it has been organized as a fintech way before people started to use the term fintech widely. So I think that industry initiatives or independent fintechs better able to connect the parties, to promote the standards. I also think that there is still sort of an element of arbitrage involved here, because fintechs have not been subjected to the same regulations as the banks. So that gives them that extra, headroom to be more agile, be more responsive, compared to banks who are literally sinking under all the regulations and the compliance that they need to work with. So I don't think that will last for long. With some of the notable fintech failures, they're getting more attention from the regulators. But at least for now, that gives them the extra ability to be more agile and more responsive.
Absolutely. Thank you, Nick. That neutral party point, it goes back to Inwa's point about partnership and making sure that the fintechs can be in a central position to actually have visibility to all the different partnership options and where can you actually, or who can you use to fill gaps. So it's a very key point. Thank you so much for that. Looking at some of the points that you mentioned, like constant evolution, agility, and adaptability to new technologies and automation of processes, you cannot talk about that without talking about cloud and APIs. So cloud readiness and APIs availability is one of the challenges that corporates, banks, and everybody is dealing with right now. Even from our standpoint at Swift, we try to be enablers of our banks to become more API ready with our transaction management platform and our new strategy. Nevertheless, all of us in the ecosystem leverage capabilities from tech providers, tech partners, etc., to catalyze and to help in that digital transformation process. So with that in mind, I would like to ask Inwa, Andrew, and Nick specifically in this question, how do you think are fintechs helping the ecosystem operate better around cloud and API technologies and specifications? And do you think cloud interoperability it's an issue? It's something that might get in the way or not? Let's start with Inwa on this.
Sure, we can spend an hour on this topic alone. Obviously, it's one of the hottest topics in both corporate and banking industry is the journey to cloud. Yeah. And given all the legal system issues that are causing all the regulatory and other inefficiencies in the system, as well as an inability to collaborate properly, I think the big journey to cloud and hybrid cloud, right? It used to be the private cloud and then public cloud, and then now it's the hybrid cloud, and that's really kind of the nirvana that I think industries are going after. There's just so much there, right? It's around getting your whole cloud operating model as well, and ensuring that security and regulatory compliance is that key layer, particularly if you think about banking and regulatory industry. It's not just about the technology alone and creating a cloud platform. And just as critical is really that middleware. It's the microservices, the middleware, the managed software, that whole intelligent workflow in the middle that you have to containerize to even get to the cloud. So there's just so much there that it's not just, in implementing a cloud platform, but actually understanding that middleware and services and microservices, including API, as you mentioned, that needs to be put in place. And obviously now with the latest technologies, it's not as hard as before, right? It's all modular, it's microservices, it's API, REST API driven. It's very easy to build that kind of connectivity in the middleware. And I think only once all of that and the workloads, right? So we're talking about trade finance, then you have to prioritize trade finance workloads. If you're talking about KYC, the KYC workloads, the data, behind, as well as all the transactional workloads that need to take place. So, a lot of banks, a lot of corporates are working on this, as we know, and that journey, I think, needs to be partnered with a technology or a fintech firm, and that's where I definitely see a big value with fintech and technologies firms is the cloud space and that journey to cloud, and that partnership is enabling a lot of companies to go much faster than they have tried in the past. So that's our view. And, again, it's multiple clouds, right? Large multinationals will have multiple clouds. It's not just one cloud. And that's why we call this hybrid multi-cloud environment. And I think there's still a long ways to go, but definitely that's been, the speed has picked up for sure.
Thank you so much, Inwa. Indeed, modularity, it's a key there, as you mentioned, indeed. Andrew, can we get your view on this as well?
I would echo that as well. And I think that For the multi-cloud point in particular, we've come across organizations that want to work with one cloud or another, and I just think that's a difficult position to maintain when you consider all the vendors that organizations have to work with. It's a big lift for a vendor to switch from one cloud, to rewrite all the code to go to another. I think that the interesting question will be how are organizations able to work across the different cloud providers, and the cloud providers themselves have identified this as an opportunity, and some of them are pushing their cloud, and they're looping in vendors and saying to a bank, for instance, that you can have access to these vendors that are on our cloud infrastructure. And so it's an interesting we're in an interesting place in this. I think we all recognize it's moving towards the cloud, and how that all shakes out. I think it does have big ramifications for the way that large organizations evaluate the various cloud providers, and the way that we as vendors respond to them. And then on the API side, because you had asked about that as well, Gabby, and it's interesting that when we as fintechs and as banks, we talk a lot about the APIs, and we all, Demica included, have the ability to do that. But it's funny when we work with corporates, a lot of times they just want the simplest solution that they can possibly get. And we have a range of arrangements with corporates where it goes from an API on the one end to the far extreme on the other end, where someone says, we just want to drag and drop an Excel file into the platform. Like, we want to open them up next to each other and drag and drop. And we have fairly large companies that want to do that as well. And I think that the dominant mode right now seems to be still flat file via SFTP, just because it's the easiest to implement. So I think, even though there's all these operational benefits and long-term benefits, a lot of times people are looking at the short-term, their in-house, what do I need to do on my side? And some corporates seem afraid to even approach their IT team. So sometimes you end up with a manual solution, which doesn't seem, it's counterintuitive to the conversations we're having today, but we still see that happening as well.
Absolutely, and that's a good point, and we see it as well at Swift. It's like in what I was saying, it's that there's a lot of interest in empowering the middleware, and then if the business applications that are developed by fintechs are using a middleware that is connected to several APIs from the open banking systems, etc., but the business application needs a turnkey solution and gives easy processes to the corporate, sometimes that's good enough. So it's the easier to implement, the better, and it's one of their main interests. Nick, can you give us your opinion on this as well?
Sure. I think standards starting to play an important enabling role for accepting by corporates cloud providers. We see more and more emphasis on those certificates as ISO 27001, SOC 1, SOC 2, and that helps the companies to overcome the initial kind of compliance checks, validations that the cloud providers, all the way down the chain from the provider that you're working with to the cloud provider who provides the basic infrastructure, such as Amazon Cloud or Azure or Oracle Cloud, complying with all those standards. So that helps the move from the in-house or on-premises software to the cloud providers. In terms of API, we see identical situation as Andrew mentioned. It starts with API, starts with discussions about real-time interfaces, and in the vast majority of cases, it falls back to flat files or secure FTP. So corporates definitely choose the easiest and simplest implementation, something that provides real benefits quickly without significant investments in the proprietary APIs.
Absolutely, exactly. Easiness to adopt, right? And standards is a very good point, and the multi-cloud needs that we're seeing in the industry are responding a lot to a proliferation of standards in terms of API modeling, API design, etc. So it's a very interesting point. Thank you. So switching gears a little bit to aspects to be mindful of. Supply chains historically have been endangered a little bit by geopolitical tensions, right? In the last 12 months, situation may have been aggravated by a series of unfortunate events like the pandemic, the Suez Canal situation, or even some financing scandals that happened recently with some fintechs. Along those lines, I would like to ask Jessica, Omer, and Nick, if you think all of this it's placing more scrutiny on the underlying technology being used by fintechs. And if that is a risk of slowing things down and slowing down all the acceleration and digital transformation process that they help with. So let's start with Jessica on that.
Yes, so I think that the question is not really about the technology, but on the how the technology has been implemented and used. So I think from fintech point of view, for sure there is a need to change the approach, looking each process from a sort of external point of view, looking what the corporate or the bank can see, the entire wing-to-wing process, in order to identify the possible solution and perhaps propose in a proactive way solution on risk that perhaps are unknown from the corporate itself, because having the possibility to interact with different corporate, with different banks, they have the opportunity perhaps to identify a problem in one corporate that has been not addressed in another one, but just because everyone have not think on the problem itself. So it's really on how the technology can be implemented. And for sure, going back to, I think, the artificial intelligence, I think this is an area where for sure there are big opportunities, and is a matter really just to show to the corporate a way to implement some logic that I think can have a really an easy adoption in the corporate. We need to understand really where this can be done.
Thank you, Jessica. Absolutely. So the how, it's not only about the specific technology, but the how it is implemented. Omer, can we get your view on this as well?
Yeah, so I think one of the areas that we have seen an increased amount of scrutiny on is particularly InfoSec, where we have seen a lot of hacks. I mean, I think the most recent scandals with the Colonial Pipeline and JBS, partnering with someone that is, ingesting your data or connecting into your systems becomes a very risky thing, seemingly on the outside, right? And I think understanding what a company's InfoSec protocols look like, what their SOX reviews and audits are. These are all important things to really acknowledge, understand what type of backing they have as well, prior to entering into relationships. And I think that's taken on a new level of scrutiny that I would say maybe 5 years ago didn't really exist. The other thing is, what type of validation and technology that fintech is really providing to help ensure reliability in your supply chain. All right. So if you want to talk about the fraud scandals that happened, a lot of them were around fraudulent transactions. Paper invoices that were duplicative, given to multiple different banks, and these are things that blockchain type solutions can help address and provide a lot more transparency on reliability on. And I think fintechs are really helping address some of those direct concerns. Yeah.
Absolutely. Thank you so much, Homer. Indeed, InfoSec, it's a hot topic right now, and it's one of those areas where scrutiny has been increased the most. Nick, can we get your views on this as well?
Again, fully agree with that. InfoSec is the dominant topic in all the discussions with all the clients. And Omar, as you mentioned, a few years ago, you can get by with just referring to some general procedures you're following. Now, corporates, before they trust you the data, they want to test the solution. So they're going deep into how is everything is set up, how is everything run, who has the access, what technologies are used, and going deeper, even checking the providers of the services to us, to the fintechs. So I would definitely agree that InfoSec is becoming the hot topic.
Exactly. Indeed. And staying on the topic of underlying technology use and areas of scrutiny by fintechs, I would like to take the opportunity to ask our audience again one more question in a brief poll, and while they respond, also touch upon the topic with some of you guys. I would like to ask our audience, which technological development do they feel have the biggest impact or will have the biggest impact in global trade within the next 5 years? And if our tech team helps us can help our audience here to gather answers to this question, we have 4 options from them to choose. which are blockchain and distributed ledger technology, cryptocurrencies, automation, or artificial intelligence and predictive analysis. If our tech team can help us get the poll out to our audience, we can gather their opinions. But in the meantime, to make sure that we have enough time to receive other questions from our audience as well, while our audience responds, I would like to take advantage of the opportunity to ask you guys in the panel the same question. And I would specifically like to ask Andrew, Inwa, and Nick in shortly their views on this. Which technological developments do you think will have the biggest impact in trade within the next 5 years? Out of those options, blockchain, cryptocurrency, automation, or artificial intelligence? Let's start with Inwa, please.
To us, the next 5 years is all about AI, predictive analytics, and automation that will impact trade in a tangible, commercial, operational way. The next 5 years, right? We're not talking next 30 years. So next 5 years, absolutely. Hands down, I would say CND is my vote. And we're already seeing the impact. I think the predictive analytics piece has been already implemented quite a bit in corporate and banking, not as much in trade finance. So I think that's coming, and it's starting to be used in compliance AML sanctions, but I believe that will be broadened. And we're seeing that into customer analytics, behavioral analytics, et cetera, using AI, ML, and predictive analytics, obviously a huge space that we're investing in and very much part of. And then automation, I'm not referring to RPAs, right? It's intelligent automation, which is inclusive of AI and machine learning, embedded automation, so that everything is integrated. It's not the old-fashioned, create a bot, create an RPA. It's an integrated, intelligent workflow that really transforms what employees do into decision makers and not into task managers. I think that is the future, and that is coming for trade finance. Trade finance is probably one of the, laggards, if you will, but we definitely see that happening finally, which is fantastic. So I would vote for those two.
Awesome. Thank you, Inwa. Andrew?
Yeah, I agree. I think in automation, that's what we're working on, and that's what we've been doing, all day, every day. That's what we work on. So that's number one for us. I think the predictive analytics piece and artificial intelligence is really interesting. If you think about how you put together and structure, say, a trade receivable securitization, you're looking at a few years of data, you're quantifying the risks there and pricing according to that. So that methodology is effectively, it's been done that way for a very long time. Now the question is where can the technology help to make that faster, more efficient? And our question for ourselves and for our clients is how do we use the data that we have access to make that a better experience for corporates and for funders. So that's kind of the next step. And we get asked a lot about DLT. I think that on the doc trade side, and I'll punt that to Nick, who's closer to what's happening on the doc trade side there. But I think in open account, I think that would be kind of the tail wagging the dog. I think that by its very nature, when you have an open account transaction, it's less about that provenance and that fraud, and more about the other pieces. So when the whole world's on DLT and the ERPs are on that, then of course we'll adapt to it and use it. But it's just not something that we're looking at the moment.
Interesting. Thank you so much, Andrew. Indeed. So trends around automation and artificial intelligence. Nick, can we get your view on this and maybe touch a little bit upon distributed ledger technology?
Sure. In terms of trends, I fully agree that machine learning and process automations are taking the central stage right now. In terms of DLT, I think it's starting to fade away a little bit in the background. People get overhyped initially with the technology. It literally was presented as this is the best solution for every possible business problem that ever existed and might potentially exist in the future. So I think the reality starts to settle in right now. I think DLT still has a good promise in the future, but it needs to focus on why it is better than existing technologies. I think in many cases you can find a replacement existing technology that can achieve the same result as a DLT at a cheaper cost and much quicker. I think the DLT should start focusing on the real value propositions. in order for the clients to understand, not only why that technology is better, but why it's better from a business point of view. Is it expanding my market and my sales? Is it cutting me cost, and how specifically cutting the cost? And I think they should really stop using the fancy words. I mean, consensus, just say agreement. I mean, provenance, they inventing all those crazy words, which is just record of ownership, immutable record. It's just nothing more than the record that has not been changed. And talk about the smart contracts, which is just a computer program, right? Start simplifying your vocabulary. More people understand you. You'll have a better market.
Thank you so much, Nick. Absolutely, exactly. And it's also where does it really add value? To your point, and the point what Andrew was mentioning before, maybe in account opening not so much, maybe in docs trade there's a slightly better position, and so on and so forth. The poll was able to be conducted with the audience. Results are in, and the majority of the votes of the audience were AI and predictive analytics. That was the lead, followed by cryptocurrencies in second. So consistent with a part of your views here, and with part of the opposing views from Nick. So thank you so much for that. We only have 5 minutes left, so I'm gonna turn it over and get a chance to ask to use a couple of the questions from the audience. So I'm gonna look at those, see if we can tackle a couple, and then leave a few minutes for a closing statement. One of the questions from our audience that it's interesting that is listed here is that fintechs can bring in skills and technologies that banks may not have. For example, IoT hardware capabilities are often not within a bank, but by partnering with fintechs, banks can move faster than if they were to develop these capabilities themselves. Do you guys agree that hardware and IoT may be a space that we didn't touch upon here, where fintechs can add value as well? It may be another segment, maybe not necessarily to trade, but it was interesting to put that question, which is out of the typical spaces that we discuss in trade. I don't know if any of you want to take that.
Maybe I can start. Yes, I think those technologies also valuable and important. They can definitely help in the trade finance. But again, we're falling back to the question of it's a platform technology. So IoT from a trade finance point of view, it's a platform technology. And if it's a platform technology, it's definitely better be done by Fintechs, by individual banks, because IoT solution promoted by a single bank might not be the solution that another bank wants to adopt. So you need to have that neutral party and neutral validation of those technologies, willing to go length connecting the IoT not only to the financial community, but also actual physical supply chain to feed this data. And once this data become available, it can be a great source of information for both the machine learning, and better process automation, visibility. So all those great things that we're aiming to achieve in the near future.
I'll just add to that, Gabby. I mean, IoT has been a big theme with corporates in the industrial sector, in oil and gas, energy. I mean, that's, aviation. That's been all around connected devices. That's been going on for decades, right? So I think from a manufacturing and from a corporate perspective, that's been a big theme already. We may not talk about it as much as in banking and in trade finance, but corporates have certainly been leading that efforts, with the likes of GE and Bombardier, et cetera. So I think the connected device concept has been there for a long time. I think when we bring that into the trade finance market, it hasn't been as directly relevant. But as we talked about early on, if we really get to a stage where the market does connect the physical and financial supply chain in a meaningful way, all the way from sourcing, end to end, I mean, that's still a long ways to go. Then I think the connected devices and the IoT technology that has really developed now will come into play. I think we're just not seeing that operationalized in the trade finance market, particularly, with banks. It's much more relevant, I think, in the industrials and sectors like that.
Thank you, Ingwen. Thank you, Nick. Absolutely. We have time to take one more and then go into the closing statements. Our audience, one of the questions that they submit has to do with tokenized trade assets. They say with the whole supply chain onboarding the same players at the real-time platform, data is becoming the new collateral via pledged tokenized trade assets. And they want to hear your view or at least from one of you on that. Maybe.
Sure, I can comment on it. I think, and it in a way links to the previous question. I think that as companies get into this space where they have a better feel for where their assets are at a given point in time, I think there are real financing implications, especially when you think about like purchase order finance, inventory finance, when you get into that space. And I think that fintechs, like many of ourselves here, would be able to partner with whoever has that data. It'll be the corporate will own the data. Are there other vendors that are getting them that data through the other types of solutions? But I think that there could be a role for fintechs to plug into that and to help companies monetize that data.
Thank you so much, Andrew. We have reached the end of the session, unfortunately. I would like to give you the chance to use a few seconds each to give one final message to our audience about how corporates can collaborate with fintechs. Any final advice or message and takeaway for our audience, starting with Jessica?
Yes, no, I think based on what we said, my really recommendation also for myself is that I think on a day by day, we have to think on our really painful process, and all the time that you said, can I wish to have a better process, and really discuss perhaps with other corporates, share our thoughts with fintech, and really working together to identify solutions.
Thank you so much. Andrew?
Yeah, I think we're at a really important time. I think fintechs are kind of defining what they're doing and maybe enunciating it a little bit better. I think there was a long time where fintechs were seen as there to disintermediate the financial institutions. I don't think, or the banks in particular, I don't think that's true now. I think that now the fintechs have a key place in the ecosystem. I think the banks and the corporates both recognize that. So I think of the fintechs as a partner and along with your banks.
Thank you so much, Andrew. Omer?
Yeah, I mean, just mimicking very much both of the first two comments there. Fintechs are constantly evolving, and what we were 5 years ago is not who we are today. And I think that's true for any fintech here on the panel as well. We've become a lot more complex entities, and we have the capabilities to do a lot more things than we've ever been able to do because of our constant development on the technology side. And as I mentioned earlier, fintechs are evolving to not just be, operating in a vertical silo, but very much capturing that wing-to-wing solution. And I would, as a corporate, challenge the fintechs that you're working with to really come up with solutions that help address those the pain points that you have as a corporate. There's a lot of customized solutions that would be out there, but for a fintech, it's not really that custom because 80% of what you probably need is already built, and it requires about 20% customization. And I think identifying what it is that need on your side is, and working with the fintech to help convey that, they can really come up with some creative solutions for you.
Indeed. Thank you, Omer. Inwa?
I would just say, whether you're running a business or a function or, whatever your remit is in what you're doing, really think about what the future operating model needs to be in order to move your business and company to the next level. And in that vision and in that planning is where, you should partner with fintechs and technology firms to enable where you want to go, and ultimately changing the way your employees work. And really, creating better experiences for customers and your employees. I think with that in mind, then come back as to where can you partner with fintechs? It's not about technology anymore, right? It is about what will be the outcome and the impact, and the technology is an enabler. So I think that's one word I would leave. Working with our clients, having been a client myself of fintechs, I think that's really kind of the best way to start.
Thank you, Inva. And Nick?
I think corporates can benefit if they become a little bit more open-minded. So don't try to only tell the fintech how certain things should be done. Be open-minded, look what fintechs are doing with other clients. They became kind of collections of best industry practices in many cases. So being open-minded, being flexible to not only force your way, but also adapt to other ways, and best industry practices can really help corporates to benefit from the capabilities that the fintechs are offering.
Thank you, Nick. Excellent takeaways. With this, I'll close the session. Thank you so very much to all our panelists today, and thank you for our audience for participating and joining us today. I hope you enjoyed the session. Thank you so much, everyone.
Thank you all very much.
Everybody.